This is not looking good for Alibaba. It opened down 6.95% in the Hong Kong market. I feel like this is just a cycle that just keeps repeating. It's down in the US market, then it's down in the Hong Kong market, then it's back down in the US market, then it's back down in the Hong Kong market. If we take a look at the 6 months chart, it is down 47.15%. Max all time down 40.78%. Guys, I am very scared right now. I have a fairly large position in Alibaba. I don't know who else is as scared as I am. And I get that people are saying this is an undervalued stock. There's no doubt that this stock is currently cheap and undervalued. But do we know where the bottom is? We do not. It's not based on how cheap, how undervalued the stock is right now. It's the Chinese government. There's so much negative sentiment around Chinese stocks right now. And Alibaba just came out with the news that they appointed a new CFO. Take a look. SoftBank slumps 9% Monday after weeks of bad portfolio news. I don't know what's going to happen. What we can do right now is hedge. But hedging or just buying long puts are very costly. So I think what I need to do is just buy some put debit spread months out as low as I can. Probably, buy the 80, 70, 60. Not saying that it's going to go down that low. But right now, look at the price and how much it's down in just 1 month, 30%. No one thought that they would see $111. All I've been hearing is that Alibaba buy at 200, buy at 180, buy at 150, buy at 140, buy at 120. Alibaba closed on Friday 111. Since the Hong Kong market is down, it's going to affect the US market. It's most likely going to gap down tomorrow. When is this going to end? I don't know. We are at a very strong support right now, but do you think this support line will hold? It did hold back in, this is a blue line. It did hold back in April, back in August, back in October, but will it hold? Alibaba is below all simple moving average, the 20, the 50, and the 200. If we go to a longer time frame, this is a 5-year weekly chart. If it breaks that 111 support, our next support is at 86. I hope we won't see this number, but I feel like we will this week, if not next week, just because of all the negative sentiment around Chinese stocks. So one way, like I said, is to hedge your portfolio, especially if you believe that it's going to go down or you want to protect some of your capital. So what I was thinking was buying some puts, but since the puts are very expensive, I have suggested the 100 puts. These were $200 a week ago. Now they're worth $800. They're just too costly. What we can do is buy a put debit spread. It costs less, but there is a max profit versus unlimited profit. So what we want to do is we want to buy the 85 and then sell the 75. Instead of paying $350 or $400, we will be only paying $153. And we can make a max profit of $847 if the stock closes below $75. I'm not saying it will, but we want to be able to protect our portfolio in case it drops more. It can drop more because we have seen it go from a high of 200 just a few months ago to now a low of 111. Anything is possible now, especially that the Chinese government is in control. It's not about fundamentals. It's not about how undervalued this stock is right now. So what we want to do is protect our capital as much as possible. I am scared, and I should have done this sooner, knowing that the government is in control. There's so much political risk surrounding Chinese stocks. It's not just with Alibaba. We have NIO as well that dropped 11%. This is holding on to a very strong support right now as well, around $30. If this drops, it can get very ugly. I mean, this stock was trading around $1.19 back in October. I think I might have to hedge with NIO as well. I also have a huge position. You just never know stuff like this can happen, but with Chinese stocks, there's just so much more risk involved. So same thing with NIO. Let's take a look. The IV has gone up over 100%. It means the stock is very volatile. So we go to the January 2022 expiration dates. Let's take a look at some of these put options. So we have the 25 strike price. They're $156. Let's see how much it would be if we did a put debit spread. So instead of paying $156, we're looking at $80, and we can make a max profit of $420. You can just buy some of this, pay $400, and get a max profit of $2,100 in case the stock goes down. This is a pretty good hedge, good insurance just in case, because we are, like I said, a very strong support. Just in case, protect your capital. Like I said, I wish I had done it sooner. Let me know in the comments down below. Are you going to hedge your portfolio? Are you buying the dip, or did you throw in the towel?